Hello, my name is Ivan, aka Armenia. I'm a professional trader with more than 10 years of experience. I'm a main trader in the TF training where we share our trades in crypto, stock, and forex market. If you want to join our great community, you can find the link below in the description or on our main YouTube page. Before we start, please hit subscribe button, set notifications on, and like this video. Okay, we start. This is a 7 video. We've been talking about like range. I'm not gonna talk about like Wyckoff, accumulation, distribution. I just wanna tell you like about the basic stuff about like range. So range or consolidation or flat trading range, literal price movement that occurs in order to create new liquidity above or below the current market price, which will be used to fill smart capital. You should understand market stays in the range 80% of the time, so it's very important to know how to trade it. Like range, flat, I can use like any word to describe it. This is like example of range, if I'm not mistaken, on gold. Also one more thing, you can find like range or like Wyckoff most of the time on instruments that have like real value. It's like commodities, it's like stock market, like shares basically. Also you can find it on a crypto because crypto has like spot market and futures. Also like oil, like platinum, like gas, and etc, etc. So everything that has like real value usually like stuck on range because it's they're like too heavy and they cannot accumulate and do distribution like currency does. But you can also find like some like ranges on the currencies as well, but more often you will see it on instruments that have like real value. How to identify range? Range is formed after the impulse price movement. Range formation, like first the upper low boundary of the range is formed, after which a short-term correction begins, which determines the lower upper boundary of the future trading range. The next element of the initial design of the range is the third swing. It must be formed between these already defined boundaries, which will be an internal structural element. So as you can see, we had this low, and then we have this lower high, right? We tried to form like lower high or something like this, but we couldn't do it. We couldn't like form to lower high because we need to lower low to form like no new lower high, so we can identify it as lower high. And next price didn't update this lower low, so we went into range, so we can identify it. And now I'm gonna like tell you how to trade inside the most significant elements of the range are it's like borders. So as you can see, this is the most important elements. You don't care what is going on like inside the range, you just don't care about it. You care only what's happening outside the range on its borders. During consolidation, traders when opening position place their buys and sell stop losses below and above the range boundaries. Such concentration of liquidity at one level is used by smart capital to open or close their position. The best opportunity to open trades show up after deviation. This is deviation. So when we're like swapping liquidity on the range borders, this is deviation, like remember it. You can also say that uptrust or like sprint, etc, etc. You can use it, but the most common like name for this is deviation. Deviation is the price going beyond the range borders. It's created to collect and form liquidity by manipulating the price. after the activation of stop losses behind the high or low of the trading range. The price reverses in the opposite direction. Deviation on one side leads to deviation on another side. So yeah, remember the sentence. This is the most important part of this block. Position opening, deviation entrance, so it's the most aggressive entry after return to range. It's aggressive, but not as aggressive like the deviation entrance after breaking the structure. This is the most safest one, and this is what you are supposed to do. But lately, I will show it to you on the real chart. Price just like keep going like in opposite direction to take liquidity from the opposite side of the range. In price just keep going up and down, like bouncing between borders. For example, this one, like right here, you can see it like on 1 minute chart. You just didn't have a chance like to enter. Maybe if you like open like 30 seconds time frame, or like 15 seconds time frame, 10 seconds time frame, yes, you might had entry here, but I doubt it. But as you can see, I just opened like 2 great positions. So like first one is this one, and then second one after it, just like from one side of the range to like another one. And also I had a great position open like right here on the bottom of this range, and my target was top of this range. And you can just like play it around. Just it's the hardest part, just identify this range, that's all. One thing that also can help you identify a range, volume profile. I will show you later how to do it. If you use like volume profile like on a whole range, you will see that most of the volume will be in the middle, on the equilibrium of the range. But also, as you can see, price going like from the bottom to high, and here we took internal liquidity, all like internal liquidity, and then went down. Took liquidity from the bottom, went up, and then crashed, went back to range and went higher. So after like we like drop here, the range already was over, and it was just order flow. As you can see, this is the range on the gold again. We had this low, this high, then we didn't update this low. It's all inside the range. How to trade it? You wait for deviation. You waited for deviation. You open position right here. Then open position, and your target will be top of this range. Then you can open position right here, and your target will be bottom of this range. So let's open position, let's say right here, put your stop above this high. This is like perfect trade for you. Same if you can open like trade right here. Not the great risk reward ratio, but still like almost like 1 to 2. That's all. Then you can open trade right here, but took liquidity from these lows. You could have opened trade right here on trade. Stop under these lows, and your target will be range. You can also just keep it open this position, because more likely after like 2-3 bounces like this, price will go to direction that it's supposed to go to, so it's the nearest liquidity. So with these wicks, we just took all liquidity, as you can see, so all this internal liquidity. So next target will be another internal liquidity, and this is what taken. This is what been taken. If I'm not mistaken, it's probably we also took daily. Yeah, we took previous weekly high. With this specific candle. So it was accumulation for next for movement higher to take this previous weekly high, and we still have this not filled imbalance, so it has to be filled at least for 50%. This is what will happen. So now this is my point of interest, and I will be looking for short position. It was great example on euro back in the days. It was perfect example. Yeah, this one. It was like classic, like range. This one. All criteria matched, so we can open like position, like short position right here. To bottom of the range, and after it like open like long position right here, stop under this low, then short position till this bottom of this range, and then long position till this order block, because we built like liquidity. It's like perfect play. The hardest part is identify range. This is the hardest part. So let me like draw it. So we have price going down, right, or up, it doesn't matter. Then we're bouncing. We're not updating, so let's work like this. We're not updating this lower high, and we're not updating this lower low. So the price basically like stuck in this area and by doing this we're forming a range where price will accumulate, and it will be accumulation or distribution. Depends on what market maker wants. So we can stuck here, we can go up to get liquidity from these highs, and if we get back again, I will be expecting price to take liquidity from this low and go up high. It can get stuck like this, but when price stuck inside the range and doing like such thing like this, do not enter any positions, because you will be fucked, because it can go like anywhere, like in any side. It can go like down to take this liquidity, or it also can go up from here to take this liquidity, and then have manipulation down to fuck people who've been trying to long here and didn't close position because they didn't identify this range, and then go up. This is what usually happening on the gold. You can just check it out and try to also watch on the gold like for some time, and you will notice this specific picture happens all the time. The most important, like for you, identify range and trade only from one side to another side. Never try to trade inside the range. All order blocks, like trend lines, all this like support resistance, like they won't work inside the range. Nothing will work. I had like one trade, if not mistaken, on PG. We had like range from we had a huge range like this. We went down, went up, went down, went up to grab liquidity, went down back inside the range, and did test of this fair value gap, and after it you can just wait for like test for like point of interest. It can be like order block, but it's supposed to be outside the range. It's supposed to be like on its borders. If it's happening like inside the range, you won't be able to open uh, trade with good risk reward ratio, or like with good win rate. More likely price will go to opposite direction, because inside the range more likely you will see this picture. This is what happened on the gold today. This is what happened on the gold. You just can't like trade this, because you trying to open, for example, right here, trying to open long position, you will be slammed. You're trying to open right here like short position, because like we're breaking down, right? Like it's support, like what the fuck, this is like support zone, right? And what happened? So we broke like support, we did like test, you open like short position and price going up. Okay, so this is like was like like false breakdown. Okay, I'm opening like long position right here. My target till this highs. What happened? We took with like internal liquidity, and we took a liquidity from the top of this range. And what happened? We're going down. Okay, this range again, like what the fuck? This support zone didn't work. Okay, I'm trying to open like short position with a target like I don't know, like this like lows, or like these lows. Okay, to the next support zone. This is resistance. And what the fuck? Why again we went up? I don't know. And that's it. And the circle repeats over and over again. You have to understand. You trade range only from one border to another border. You did like 1 2 trades, so you have like 1 2 bounce. That's it. Now you have to wait, because it can be like small range, or if it's extend, it might be Wyckoff. And it's like completely different story how to trade Wyckoff, because you have like specific rules for Wyckoff formation. And but it's a very complicated topic, and I need like few hours to like explain it. But after explanation, it will be like easy, and you will be seeing it on the chart like over and over again, like without like any problems. But like for first time, it's super complicated. I hope you understood the gist of this video, and if you like it, hit subscribe button, set notifications on. We will do like one more video where I will be explaining my exact strategy. Um, it won't including like range, because trading in range is like completely different. But we were talking about like normal order flow. I will show you exactly what to do, and what signals um, I expect on the chart before I enter position. Also, if you want to join our community, you can find link below in the description. I hope you liked this video, and see you next one.